Many people who would be home buyers are feeling the pinch of affordability constraints and are unable to buy a home due to the high monthly payments. To solve this problem, the Trump administration presented an interesting new idea: 50-year mortgages. A 50-year mortgage is just like a regular 30-year fixed mortgage, except that there are 20 more years of making payments to the bank. This seems like a daunting task. But when it comes down to it, your monthly payments are a little bit smaller. For example, a 50-year payment on a $400,000 home purchase is about $250 lower than a 30-year payment on the same home, assuming 10% down and a 6.25% mortgage rate. For a $600,000 home, the difference is about $350 a month. So the idea here is that the $200 to $300 difference will be enough to get people off the sidelines and into the housing market. But it doesn't do anything to address the supply constraints in the market. More people chasing after the same number of homes will cause home prices to rise just as they did in 2021 when mortgage rates were exceptionally low. Not to mention, this isn't the best deal for buyers of all types. Buyers will end up paying over 86% more in interest over the life of the loan for a 50-year mortgage compared to a 30-year mortgage. This means that over the first few years of the mortgage payments, very little is going toward principal. It's primarily interest payments on the loan. So for example, after 10 years, if you have a 30-year mortgage, you'll have about a 24% stake in your home, meaning you own about 24% of the value of your home. But with a 50-year mortgage, you'll only have about a 14% stake in your home. And that's about how long people usually stay in homes. So who do 50-year mortgages really benefit? Well, first, banks, who get to collect your interest payments for another 20 years. They may also benefit folks who are right on the margin of buying a home, for whom a $200 or $300 difference a month is the difference between buying a home and not. These people are ones who are going to stay in their home for a really long time, or at least until their financial situation changes and they can refinance into a shorter-term loan. If it's the case that there are a lot of these people, then we'll expect to see home prices shoot up as more buyers go after the same number of for-sale homes. If this is a small section of the market, then we don't expect to see much difference made by 50-year mortgages at all.